Welcome back to Squawk Box. Oil prices hitting a fresh two-year high overnight after weekly US government data showed a surprise drawdown in crude inventories. They're currently sitting at 87.81 on the charts. Crude prices tick up of about 1.25%. Let's bring in Jay Taylor, who is President and CEO of Taylor Hard Money Advisors, joining us from New York, and also staying with us around the desk this morning is our chartman Daryl Guppy. And Jay, if I can come to you first on this, we've been watching the price of oil all week, the bounce on the back of quantitative easing, but also now the drawdown in inventories. Do you think there is a case for oil to continue to rise?
Well, yeah, I'm not sure how strong the case for rising oil prices on the basis of global fundamental economic growth. I mean, that would seem to be quite tepid, at least, you know, from what we're experiencing in the States. I rather think that this commodity bull run here has to do more with just monetary stimulus. You know, and all manner of stimulus programs that are being pumped into the global economy, and I'm not sure that it's going to have traction long term. But you know, I think Wall Street is having a party. I think the financial markets are doing extremely well, but you know, in the United States, it's a sorry situation in the economy here. So I can't be very bullish. Now, maybe if I traveled to Asia more often, I would be more bullish from a fundamental point of view. But just judging by the U.S., and the U.S. still is, you know, a major component of the global demand for oil. So it's hard for me to get bullish on a fundamental basis on oil or any of the commodities for that matter.
Really? Huh. Sure, you're shaking your head.
Just on that, you just touched on Asia. How much leadership do you think we'll get from the China data later on today for the commodities markets?
Well, you know, I guess I'm not a real student of the demand from China, but I honestly think that, you know, if there is a bright spot, clearly China is where it's at, and Asia is where it's at. So I guess there is growth there. My question with respect to China is China in a bubble? You know, if you don't have market-driven growth, if you have planned economic growth, as we increasingly have around the globe, then how sustainable is it? That's the question in my mind. So, you know, I
don't know. I mean, they've been averaging 8% growth a year for almost a decade, so that's not too bad.
Well, you know, to the extent that, yes, but that's true. But it's still an economy that's quite a bit smaller than the U.S. economy, isn't it? So there's no question about it that the Asian demand is offsetting tepid demand in the West. There's no question about that. I don't have a way of measuring it entirely. I just see the enormous amount of indebtedness that the United States has. I see the potential for more banking crises or credit implosions around the world. I mean, we're just talking about the problems in Europe yet with the pig nations, and you know, in the United States, our local governments are in big trouble. They're all bankrupt essentially. I think the United States is bankrupt.
Let's cut to the chase, Jay. You see hyperinflation down the road, right?
Well, I see there's a possibility of hyperinflation. Actually, to be honest, I think there's an equal chance that we could have a deflationary implosion. I think on that score that the Federal Reserve isn't wrong for being concerned about deflation and pumping money into the system. Look, we have debt that has grown exponentially. If you look at the total amount of debt in the United States from all sectors, it's growing exponentially, and income, if it's growing at all, is growing in a very shallow linear line. And you know, you don't have to be a rocket scientist to understand that paints a picture of insolvency. So what we're trying to do is print money like mad, but honestly, I think all that's really happening is Wall Street is having a party. I think Wall Street and the bankers are being bailed out. They're doing quite well, but Main Street in the United States is not doing very well.
Yeah,
unemployment has not come down.
It sounds like you're fairly disenchanted with some of the fundamentals out there, and almost paints a case for gold. Darryl was just telling us before he's watching out for 1480 on the charts. Where do you think gold is going to go, and are you committing capital to that trade at the moment?
Well, absolutely. Gold, and more significantly, gold mining shares, because, look, the real price of gold has risen very dramatically, especially since Lehman Brothers. And this is why I think trying to pick a nominal price of gold, from my perspective, is sort of a foolish game. What an ounce of gold will buy is really important. And since the Lehman Brothers decline, an ounce of gold will buy far more. I like to judge it relative to the Rogers Raw Material Fund. Before Lehman Brothers, in August of 2008, an ounce of gold would have purchased only 15% of the Lehman Brothers, of the Rogers Raw Material Fund, I should say. After that, at the depths of despair in March of 2009, it would have purchased 44%. Now an ounce of gold will buy about 40% of the Rogers raw material fund, and what we're seeing is an explosion in earnings for the gold mining companies, and I think that's going to feed down to the junior miners, the guys that are finding the gold in the ground. That's what I'm most bullish about.
Okay, let's get Daryl back in here. Daryl, you charted gold for us. What about the poor man's gold and silver?
Poor man's gold with silver. Once we've got the silver chart, we can see that it's behaving quite differently from the gold chart in the sense that we have a very, very rapid rise. This is almost exponential. One of the key factors is it's almost a parabolic trend, and the characteristics of these is when they collapse very, very rapidly. Upside target for silver at this stage initially is 2,800 plus beyond that.
Wow, look at that steep curve.
Yeah.
It's a wonderful curve. It's a very profitable curve.
Parabolic looks like a, I don't know what, reverse ski slope.
I was just thinking about ski slope.
I know
ski
you
season.
Yeah.
You can read my mind.
Okay, listen, Jay, we got to go. Thanks for your time. Nice to talk to you. Hope to do it again.